I need you to stop what you're doing. Put down the coffee, close the other tabs, and look at the screen. Look at the price ticker on your phone. What does it say? It likely says something around $71. If you're looking at the COMEX spot price or the London Fix or any of the major Western feeds, you are seeing a number that hovers right there in the low 70s. And if you are a technical analyst, you are probably drawing lines on a chart, looking at support levels and telling yourself that the market is consolidating. You're telling yourself that silver is holding the line. But I'm here to tell you that the number on your screen is a lie. It is not just a little bit off. It is not just a lagging indicator. It is a hallucination. It is a ghost signal from a dead system that hasn't realized it has stopped beating yet. Because right now, as I speak to you on the other side of the world, in the physical streets of Tokyo, the reality is violently different. We are receiving confirmed, verified reports from our sources on the ground in Japan that retail silver bars, the actual physical metal you can hold in your hand, the metal that protects you from currency collapse, are changing hands for 20,000 yen. Let's do the currency conversion together. At the current exchange rate, that translates to roughly $130 per ounce. I want you to let that sink in. $130. Now look back at your screen. $71. That is a spread of $59. That is a premium of 83%. In the history of modern financial markets, we have never seen a divergence this extreme between the spot price, which is supposed to represent the global value of the commodity, and the street price, which represents what people are actually willing to pay for it. An 83% spread is not a market inefficiency. It is a market failure. It is the financial equivalent of a heart attack. When you see a spread of 2%, that is normal. That is the dealer's profit margin. When you see a spread of 5%, that is high demand. When you see a spread of 10%, that is a supply squeeze. But when you see a spread of 80%, that is a complete systemic fracture. It means the mechanism that connects the paper market to the physical market has snapped. The cable has been cut, the elevator is falling, and the floor is rushing up to meet us. Now, I know what the skeptics are going to say. I can hear the comments already. You are exaggerating. Japan has high taxes. Japan has a consumption tax. It costs money to fabricate the bars. It costs money to ship the metal. You can't compare a 1,000-ounce commercial bar in New York to a 1-ounce coin in Tokyo. And to those people, I say, you are missing the point entirely. Yes, there is friction. Yes, there is VAT. Yes, it costs money to mint a coin. But friction does not cost $59 an ounce. It does not cost $59 to stamp a piece of silver. It does not cost $59 to ship a piece of silver across the Pacific Ocean. Even if you add up every single tax, every single insurance fee, and every single minting cost, you might get to $10. Maybe $15 if you were being generous. Where is the other $45 coming from? It is coming from panic. It is coming from scarcity. It is coming from the fact that the Japanese yen is imploding. And the Japanese